Today with Scott Carter from Caliber Home Loans. And I had the pleasure of meeting Scott and his wife, Donna. Gosh, it's been over a year ago now at one of our neighborhood functions. And then I had the pleasure of getting to work with Scott on some loan programs, working with my clients, and I've always heard wonderful things from other top producing agents about you and your business and your company. And so I was very excited when I had the opportunity to work with you as well. But I want you to go ahead and spend a few minutes and share with people today. Tell us about your company and touch on some of the more popular loan services that you provide.
Okay. Well, I work for Caliber Home Loans. I've personally been in the business about 28 years now. Caliber is a mortgage banker, one of the largest mortgage banker non-bank lenders in the country. We service about $1.5 billion in loans, and so it's a good company to work for right now due to things going on in the industry. Very deep pockets and very stable. And basically, we offer ordinarily just about every loan program that there is out there. But traditionally, most of your loans are going to be your conventional loans, FHA, VA. Do a lot of VA loans here in this area with the base and all the contract workers here.
Yeah.
And of course, USDA and the gamut. So.
Nice. So, talk a little bit about the background of your company. You said that they've put you in a really strong, solid position financially, right?
Yes. Well, Caliber Home Loans is, like I said, we're a mortgage banker. We're actually we're owned by an investment banking company out of New York and Wall Street with very deep pockets. So that eludes us to some of the things that some of the other companies can't do just because of the financial stability that we have. So we have some of our own portfolio lending products that are the out of the box type stuff, which unfortunately we're not doing right now due to the COVID crisis. That's one of the things that's happened. We've seen a lot of loan programs go away in a very short period of time. I was here in the business during the crash in 2008, and we'd see loan programs disappear over over a matter of 2 years. They'd go away. Everything was fast forward to about 2 weeks this time. So
That's been the main difference. So you said that you've seen some of the loan programs go away, and there's obviously been some guideline changes to the loan programs. Can you elaborate on what some of those changes have been?
Yeah, and I'll just talk about the main ones that affect most every borrower. And these are changes that have come from Fannie Mae. They're not Caliber specific. Main thing it has to do with verifying employment. Right now, we used to be able to verify somebody's employment within the last 10 days of closing to verify that they were still employed. That's been moved up to 3 days. So,
and I've heard some of ththose horror stories.
Yeah, so that's been moved up to 3 days, and the problem now is trying to get hold of somebody's HR department because of so many people working from home to actually be able to verbally verify that employment in the last 3 days. So there's workarounds that we're having to go through, but we're actually, being proactive and reaching out to our borrowers and saying, this is going to happen, so you need to let us know who we can contact in those last 3 days.
And that's one great thing, just working personally with your company and having my clients work with your company. Your level of communication is very active and very, very proactive. And I know as a homeowner, future client, they greatly appreciated that. And especially now with all of these changes going on, and especially with people being laid off or having to take time off work, definitely changes things. So.
Yes, and then for self-employed people, it's even a little bit more ridiculous. So in the last 10 days, if we're dealing with a self-employed borrower, we have to see deposits into their bank account consistent with their income we're using to qualify them.
Okay. Wow.
And so not everybody that's self-employed gets consistent deposits.
Right.
So we're either having to rearrange closing dates around when a deposit might go in, or we're just looking at their situation in general, saying, okay, Fannie Mae says if you can't, then you have to reduce their income to 75% of what you've used to qualify them. So we're looking to say, okay, all right, so if we, rather than changing the closing, waiting for a deposit to come through, okay, can we qualify you with the 75%, or do we need to restructure this loan somehow to make that work? So a lot of challenges, and because I'm carrying a pretty big pipeline of customers right now, so we're having to go through and be proactive and figure out which ones these are going to affect and which ones they're not.
I would imagine, especially with a self-employed,
Mhm.
person going through this and all of the changes and things like that. And are these changes taking place like every single day? Are you just getting upload of updates and changes, or?
Our last update came out on Monday. So we have a 37-page guide now of changes that have happened. I could read through that if you really like for me to, but like I said, just kind of kept touching on some of the main ones. And so right now we've suspended jumbo lending, so we're having to get creative with our larger borrowers. Putting together some combination loans that aren't too bad anyway, because now that the conforming loan limit is up to 510, 400, we can piggyback on a home equity line of credit behind it and avoid the jumbo loan. The credit score requirements have been increased for our government loans to 620, where we used to be able.
Right.
We used to be able to go down to 580. Now that is a caliber overlay. I've heard other lenders have gone higher on their credit score requirements.
I've heard higher as well.
So we're still at 620, but those are for applications dated after a certain date, so it didn't affect people already in process that were already in contract to purchase a home.
Right.
But moving forward, there's also some additional requirements as far as debt to income ratios, and if they're at a higher debt to income ratio, credit score requirements and reserve requirements that have to be made. So it's just kind of working through this. And the good thing about this, I think, it's going to be short lived. It's going to be temporary when the country starts back up. It's just that the fear is that people are going to purchase the home and immediately not have the job and be able to make their mortgage payments.
Right.
So that's part of the forbearance issues that people.
So let's talk about that, because there's been a lot of talk online, a lot of articles, and then people's questions. So with that comes a lot of misinformation out there about loan forbearance, who should do it, what circumstances qualify. So can you elaborate on what's going on with that, with the loan forbearance?
Yeah, there is a lot of misinformation out there about that, and to be honest with you, there's not 100% clarity on our end as well. What's going to happen at the end game, but the basics of it are, if you can make your payments and you're not affected by COVID, just go ahead and make your payments, because to get forbearance, it is going to take some work because of the number of people that are trying to get forbearance. So if you can't make your payments, you do need to contact your loan servicer who's collecting your payments, because you can't just miss payments. If you just miss payments without getting forbearance, it's going to affect your credit. But if you cannot make your payments, you've lost your job, you're furloughed, and you don't have the means to do it, definitely contact them. You will be given right off the bat an automatic 90 days to not make your mortgage payments. At the end of the 90 days, then what we were originally told is that borrower was then going to have to make up those 3 payments plus the payment that was due. So they were going to have to come up with 4 payments all at once.
All at once.
Yes, which we all like, what good is that going to do? Because if they couldn't afford to make 1 payment, how are they going to be able to make 4? Mm-hmm. So that was what we were originally told. We did have a call from our CEO last week that basically alluded to the fact that they would probably, if they, at the end of the 3 months, they would have to contact the mortgage company again, say, I still cannot make my payments, or I cannot make up all 4 payments, and they would more than likely be given another 90 days of forbearance. And then at the end of that time, the 6 months,
Right.
then those payments would be due. If they could not make up all those payments at the end of the 6 months, they would be offered either a modification, which would affect their credit, but they'd have to modify their loan depending on their situation, or it's possible that those payments would be tacked on to the end of their loan. Now, we were not given exact guidance on that that this is what is actually going to happen, but he did allude to the fact that there's more flexibility than what was initially given to us.
Okay, yeah, because I've heard the similar situation too, where it will be tacked on to the end. And I think a lot of people, you tend to focus on maybe what you want to hear or hear what you want to, and
Yeah.
that's really all that a lot of people heard. So that was the misinformation that was being put out there, without really understanding the consequences or what it would take to get there, so forth. And then all the changes that they were doing. You said that they're changing things on a weekly, maybe sometimes daily basis, based on what's being passed by Congress or not being passed. So
Yes. And in fact, I just had one of my customers contact me today because they heard about a bill that was passed that everybody didn't have to make mortgage payments or rent for a year. Well, there is a bill being proposed by somebody in Congress, but I doubt very seriously that would pass, because basically they're saying that the government would then make up those payments, and we're talking trillions of dollars that we don't have to be able to pay those payments for people.
Right. Wow. Well, so let's jump forward a little bit and talk about how are appraisals being handled now? Because like you said, fortunately for me, there are people who are buying homes every day. People still need to sell homes. People still want to buy and still want to sell. So the business of real estate is still happening. And within that business, we have inspections, we have appraisals. So on your end, how have appraisals been affected, and what's going on with that realm?
Well, they have, but you're absolutely right. There is still a lot of buying and selling going on up there right now. I'm as busy on my purchase transactions as I have been in recent history. So it surprisingly hasn't slowed us down. But Fannie Mae has given guidance for appraisals. So what they've done is they've kind of tweaked their system somewhat, both Fannie Mae and Freddie Mac, with their automated underwriting system. So we're receiving more appraisal waivers on transactions, where they're saying we don't require an appraisal because they have a database of homes in their system, and it comes up with an automated valuation. So that we're seeing more of those at this time when we were told we would. But they've also issued guidance too that we will allow appraisers that feel like entering into somebody's home that is that's occupied is a health risk. So we have given the appraisers the ability to do a desktop appraisal now, rather than having to enter the home. So
And that's really sufficient and satisfactory.
it is, yes. Can't do it for new construction because those homes are empty. So there's no reason you can't go to those homes. But so we're getting both desktop appraisals and drive-by appraisals right now, which is I think it's a pretty good solution to the problem of not having appraisers endanger themselves by having to go into people's home, or endanger those people's homes that they're having to go to.
The families that live there, absolutely. And I'm just appreciative that it still gets the job done. It still enables the business to continue.
Yeah, it's very interesting, the flexibilities that have opened up in our industry due to this, and it's happened very quickly, because usually changes like that take a long time to happen, and it's been interesting to see how swiftly they've reacted to this.
Well, and just entrepreneurs in general and business in general finding ways to adapt and overcome. I know the nature of my business has changed. You pretty much you work from home. Do you have an office that you go into, or?
Well, I do have an office, but I haven't been there in 3 or 4 weeks now. So yeah, we do have a physical location in Riverview, right in Winthrop, that ordinarily I would be at 4 to 5 days a week. Sometimes I'm working at home 1 to 2 days a week, just just for convenience factor. But it's a good thing that I have that ability to work from home. And with our technology that we use these days, it's pretty much paperless. So I wasn't meeting most of my clients anyway. They were applying online, they were uploading documents to us, email, phone. So I'm still able to do all those same things. Now there are, there have been people that have said, "Hey, I don't have the ability to scan new documents," and I've by appointment. Yes, I will go meet you at the office. I'll get your documents for you, and I'll scan them for you into our system. But that's that it's kind of a rare occasion right now.
Right, right. So let's talk a little bit back into the lender world. Capacity and liquidity. Talk to me about those buzzwords. There's a lot of information going on about those right now.
Yeah, it's capacity is kind of what it sounds like, because of the amount of purchase business going on, and then on top of that, because of interest rates dropping so much, the refinance business that's come in. Capacity is an issue for a lot of lenders right now. We're handling it pretty well at Caliber. I'm have a loan right now that I'm closing in about 2.5 weeks, so we're still able to get it done.
Right.
But it's not just on the operation side as far as getting loans closed, but it's also has to do with the warehouse lines and the capacity that you could of loans that you could put on those, because some of that has to do with the liquidity, which has been hindered by the forbearance issue and the fear of defaults going on. Because if a big company like mine that services 1.5 billion loans, you use those loans that you're servicing as collateral to borrow money on the warehouse lines to lend. So when there's that fear of forbearance and defaults going on, they reduce the value of your servicing. So now the value of your servicing has been reduced, and now your limitations on what you can put on your warehouse line have been lessened, and now you've got margin calls. So we're having to come up with money to pay those margin calls. Fortunately, Caliber is a very big company, very strong financially, and backed by a company that's even stronger financially. So we're not having problems coming up with these margin calls or having to fill our capacity. But there are a lot of mortgage companies that are. So I'm hearing a lot of scary stories out there with companies that aren't even able to lock loans right now. So I think we'll make it through, but I don't know that all mortgage companies are going to make it through this if it lasts too much longer.
Wow, and it's definitely scary, but definite the reality right now of what we're facing. And so
Yeah.
I'm glad that you were able to share the message of your company and your strength, I guess, your that you guys are able to provide. Because
Yeah.
I think that's part of the fear out there now as well. But I see the fear of the purchaser, and then you're working on the fear from the other side.
Yeah. Yes, our fear is that purchaser is not going to make their payments, so it's a little bit different. But I mean, there's a lot of checks and balances that have been put in place to make sure that that's not going to happen. And we do want to lend responsibly. We don't want to put people in a position where they get into a home that they can't make their payments. So that just doesn't help anybody.
We definitely want to encourage, responsible purchasing as well. A lot of investors are coming out of the woodwork, and people are trying investing for the first time because rates are so low, and there is so much inventory in the market. And it's a great time to buy, and people are recognizing that. So, having those conversations with people as well. But you touched on refinancing. So talk a little bit about who is a good candidate for refi. How would they know? What are some indicators, things like that?
Well, most of it has to do with what your current loan interest rate is and what your balance is. because the higher that your loan amount is or balance is, the less you have to reduce your interest rate for it to make sense to refinance, because most of the costs are fixed. So it's always a calculation of, okay, it's going to cost you this much to refinance, but it's going to save you this much in your payment. So if we can make that break even point short enough, then it's going to make good financial sense to do it.
Right. Loans take you to pay back or break even that amount.
Yeah. But I mean, we are doing a lot of refinancing right now, and interest rates are at all-time lows. I really think interest rates, there's a good possibility we're going to see them even go lower. So I do have several people that have applied for me for refinancing. They're hearing the same things I am. They're listening to my advice. We're putting them in the process, getting them their loan approved, and we're just kind of sitting back and waiting and floating their interest rate for them. And I think once this craziness goes away and those capacity and liquidity issues we were talking about subside somewhat, we're going to see interest rates drop from where they are right now. I think there's a good possibility. So that's why a lot of my refinances right now are just kind of sitting in the waiting mode. But I've told them, don't wait in the sideline, because if this thing happens and they drop, it could be very short-lived. And if we don't have your application in process, then we can't take advantage of it.
All right, so that's good to know. So it's kind of hurry up and get your application in, and then let's just wait, put on the brakes, and see what's going to happen. But line everything up so we're ready to pull that trigger.
Correct. That's kind of the and then other people were saying, I don't want to take that risk because this refinance is going to save me $300 a month in my payment, and I'm comfortable with that, and I know that it's a good value right now, so I don't want to take the risk. I just want to go ahead and refinance, lock in my rate, and I'm happy with it
and get started. Yeah.
So it's up to them. I give them, my advice and opinion, and it's their loan. They get to choose which way they want to go with it, because not everybody's a risk taker.
Right. Especially when it comes to finances and.
Oh yeah.
Real quick, also touch base. Any guideline changes for, say, pre-approval, pre-qual letters, but with work and things like that, timelines of how long are they good for, things like that?
Well, the only thing that we've had a change as far as documentation timelines, they've just changed it recently. That used to be a bank statement or pay stub was good for 120 days to closing. Now they're only good for 60 days. So we would have to update them if they're over 60 days old before closing. But as far as the pre-qualification or pre-approval goes, I mean, it's if your income hasn't changed or you haven't added new debt, you're still qualified for the same amount. We just might have to update documentation sooner than we would have had to otherwise.
Okay, great, good to know. Any other information or message that you want to put out there, you want people to know?
I think the main thing is just the misconception of the fears of what's going on in the industry, and that it's probably not a good time to buy a house because of everything going on. We're going to see the housing market crash. Well, I'm seeing the exact opposite, and most people that I've talked to are that we're actually as busy as we have been. So if there was an indication that this was bringing down the housing market, I'm definitely not seeing it. So it's a great time to buy. I think the people that have their house on the market right now are motivated sellers, because people aren't just listing their house just to let people walk through it if they don't need to sell. And the people that are out looking right now are motivated buyers. So it's a really good time if you're looking to make a purchase to buy a house, because with interest rates this low, and you got motivated sellers and buyers out there, the transactions are happening pretty quickly.
You definitely have real people, real estate happening right now. It's kind of weeded out the looky-loos and your open housers, for people who just like to cruise on the weekends and check out the local open houses. It really brings to the table your serious buyers and your serious sellers. So Scott, I know you're really busy, and I appreciate the time you've taken today to have this conversation with me and put some knowledge out there and share some value with everyone else. If anyone has a question for you with, refi or loan options and loan purchase programs, what's the best way for someone to reach you?
Well, there's a few different ways. They can email me, which email is always a great way to reach me, which is my email address is pretty simple, scott.carter@caliberhomeloans.com. My line at the office, which if you call that now, you'll get voicemail, but I do get an email notification of voicemail, is 813-603-5708. Or call myself because I'm working at home. It's the best way to reach me right now at 813-293-1100. Or I do have the website that goes to our Caliber page, which is www.scottcarter, all one word, .us.
Yeah. Excellent. Well, I'll be able to share that also with anyone who's interested and reaches out to me to get your contact information as well. So
Okay, great.
I appreciate the talk today and the information. I always learn so much from these conversations with you, and I appreciate the value and your level of expertise. It's always a pleasure.
Well, I appreciate you having me on. It was a pleasure talking to you as always, and look forward to working with you again.
All right, sounds great, Scott. All right, thanks.
Okay, thank you.